Happy Friday, traders. It's 8:04 a.m. Chicago time on Friday, the 2nd of October, 2020. Thanks for joining us. Episode number 1850. 850. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Lots going on today. Couple of important pieces of news in case you're under a rock or haven't looked at anything yet, haven't pulled up your phone or iPad. The first piece of news is that POTUS and FLOTUS, the president and the first lady of the U.S., tested positive for COVID-19 following, I believe, who was it, the press secretary or somebody, having tested positive yesterday evening on testing the president and his wife. They turned out to be positive as well. The market dropped quite a bit, dropped from 3361.75. That's the SOC, the scene of the crime, all the way down to 3300 and a quarter, approximately 60 points or so, and has been sitting down here for some time. The second piece of news is that the House of Representatives passed after a lot of wrangling all week long, and the market has responded all week uh, to the to the back and forth between the Secretary of the Treasury and House Speaker Pelosi. The $2.2 trillion COVID relief bill has been passed by the House, basically along party lines, and don't know what's going to happen with it. It's probably a dead bill anyway, as the president was the other side of it and negotiating it. And couldn't agree to the terms. But the market's been looking for that and has been responding to that news. The fact that they just couldn't get an agreement, we would sell off, and then it looked like they were going into discussions, and we'd rally. Anyway, that's the other piece of news that is out there. In addition to that, we had non-farm payrolls this morning. And the non-farm payrolls were really overall a mixed bag. The headline number, non-farm payrolls for September, the change in non-farm payrolls in September was plus 661,000. Expected, the consensus was 850,000, so it came in slightly worse. The forecast was 419 and 915,000, so that missed. However, the other numbers, private payrolls came in at 877,000 versus 850, slightly better. Manufacturing payrolls, 66,000 versus 35,000. The unemployment rate dropped versus expectations, 8.2%, dropped to 7.9, and so on. Again, the headline missed, but the other numbers, the numbers connected with it were slightly better. So that's the big news of the day. Fed's Harker is currently speaking. Factory orders comes in at 10 o'clock. We do have Michigan expectations, Michigan sentiment final. It doesn't have much of an impact. Also at 10 o'clock, and that wraps up the week for us. So that's where we stand. Today, because it's non-farm payroll day, it is a little bit special in that I'd like you to just take a moment, whether you're on Periscope or on YouTube, please take a moment to answer the question in front of you. Where are you located? Please type in your city, state / province and country. That way everybody can look around in the live chat connected with YouTube and can see who's around you. And that's something I like to do once a month. So it's really, community is very, very important to me. That's why Convergent exists. That's why EdgeClear exists. And so maybe there's a way for you to connect. Of course, you do not want to put your email address into live chat, as it's accessible by anybody on the internet. You just get spammed and so on. If you wish, you can go to futurestrader71.com /contact and provide your contact information. I would really like to put up a board where we can connect people. That's just not something I've been able to get to, although that's been my ambition for about the last year and a half. A match.com for traders, so to speak, although we've built something like that within Convergent for accountability partners. Anyway, please take the time to do that. Let's dive in. Let's look at what the market is doing. Clearly, risk-off sentiment today. Crude is getting its teeth knocked out a little bit, down 4.73% on the November contract, trading at 36.89. It is down $1.83 versus yesterday. $1.83 versus yesterday. And that's the weakest link. On the index side, the Nasdaq taking a beating, 280 points down, 2.41%. The Russell's off 30 points, or 1.98%, almost 2%. The S&P down 58.5, 1.74, and the Dow Jones is down 465 points, or 1.68, and the DAX is off 1.24%. The leaders, what we would expect, is the bond market. Now, here's the thing. Despite this big news, despite the risk off, money is not flowing into bonds here. The bond futures are only up 17 ticks. The yen is up 260 pips, and the dollar's up 16 cents. The Bund is up 26 euro cents, and the U.S. 10-year notes up 6.5 big ticks. So it's not like there's a huge flow into safety assets. Gold is down. Gold is down this morning, trading at 1910, which is $6.30 versus settlement. So you would think money would move into gold. Be careful today. This is a news-based event. The market was bouncing on top of 3360 yesterday and overnight. Much of the volume before the drop was focused in that 3360 area, the high volume node we talked about yesterday. Again, as I said, you cannot post your emails here. There will be thrown out by the chat service. It's just not safe to do that. Anyway, so the market was in balance at 3360 and has dropped and is bouncing out at 3315, the point of control. Remember 3317? Remember that area? The low volume node. We're building a high volume node on top of that. That is basically where our overnight point of control is. These numbers just keep regurgitating themselves and repeating. The next big area below, of course, is the composite high volume node at 92.75 that we held the other day. If we continue to push lower, that was the low from a couple of nights ago. I believe that was Tuesday night. Yeah, Tuesday night or Wednesday night is where we tested that last low. And so that's where we stand. It's interesting. This could be, and I'm just going to warn you, just like I posted in the Convergent head trader chat. I said I gave the SOC at 3361.75, and I said this is a news-based event, so there's the risk of sell the rumor, buy the fact action today. Be careful, and that's where it stands. So let's get into the review segment. Let's switch screens here and look at what was expected yesterday. Yesterday, the primary expectation is a quick test up from the open. Remember, we're opening right on top of the point of control. Full session VWAP expected a quick test up, but overall was looking for a run down to 3360 and then a push into 3350, 3344, and 3340. Those are the key areas below. What 3340 being this high volume node we've been stuck at for the entire week here. So overall, looking for an impulse down for the market to hold steady at 60 and then drop into 50, 44, 40 as the next key areas. Here's what actually happened. quick test up, boop, right? And then a drop, right? And immediately it drops. It basically did exactly as expected. We're looking for a push down real quick. A lot of odd action yesterday. I pointed this out to the Convergent members. Look at that delta and this bar right here. A lot of like just spikes. This bar, this bar, this bar, this bar, and on the close, a lot of spikes with delta. It seemed to me like there was some sort of a buy program that was kicking in, pretty aggressive again and again, and then backing off. But overall, we did get the push down. We went to 55, 56. I was looking for 44. Was looking for 44, 40, and 50. 50, this stock zone here. We pushed back up yesterday. The 75 was pretty formidable. This is an area that I'm going to watch very carefully, and I'll put a stock zone there. In fact, let me turn these stock zones off because they represent today's stock zones, not yesterday. This area right here on the trip back, you'll want to pay attention to it. Take a moment to put a horizontal reference line there. It's likely to be important on the way back up. And so yesterday had some pretty interesting moves, pretty good consolidations. Look at this beautiful zipper at the low here. Beautiful zipper. Balance leads to imbalance. It pushes all the way back up to the opening swing low. The opening swing low, right on the dot at 75. Comes back off, and where does it go? It goes right to the top of this zipper before it bases again and pushes back up. Yesterday ended up with a we ended up with a normal distribution, almost normal distribution balance profile with a value area. The value area low is 3360. So what we have is a market that first accepted 3360 as the most traded price. And of course, it is that high volume node we talked about, composite high volume node we talked about. And then all of a sudden we have value low being 3360 and the point of control shifting up 11 points higher. The market is accepting higher values and put in a higher high, higher low. However, there are some things that I need to point out here before we get into the daily. Let me just turn on the profile. A couple things to really point out to you. Remember, 87.50. The overnight session yesterday had an 88 high. And I talked about this, that in the overnight session, we tested the 50% fib from the all-time high. So this is the fib from the all-time high. We can see the connecting line right there. Let me shift it down. The all-time high, if your data was properly adjusted, the all-time high should be on your charts, should be 35.7675. On the RTH session, on the pit session, your high should be 35.7675. And if you take that high to the most recent low of 31.98, you should have a fib of about 33.8750 for the midpoint. One thing I pointed out yesterday as well is there's an excess on a daily. Look at that, with the wick on that candle shoved itself all the way up and came right back off to finish right on top of the 3340 balance. And the next day we opened right up here, and I talked about this, that the expectation is overnight it's likely to push up, but then sell off into this gap zone. We have a gap zone right here. Sell off into the gap zone. I expected that to happen overnight yesterday, and it didn't. We came in with a market that was higher. And so yesterday what it did is it traded into and through the not all the way through that excess high, and it ended up putting a higher high, higher low. More importantly, this higher low, very, very important, because we have a lower low, then we have a higher low. So this could trigger at this point. We're not one time framing up. Yesterday triggered one time framing up on the daily chart, we already triggered one time framing or a reversal on the weekly because we took out the prior week's high at 12 and a half with a gap up. And so on the day time frame, we are one time framing higher. Yesterday confirmed that, put in a higher low. It did put in a higher high, but I'm more interested in the low at this point. And to me, it looked like it is likely to consolidate and continue higher. Remember, the target here was 34.05, 34.05 from back here, 34.0475, right? And what it has done instead, because of the news, is it crashed through this. It just blew through this 40 area and is trading in the gap. It's at the gap mid basically at 33.11 right now. This is just important to note that there's a reversal that is happening here. The overall picture, however, is we have a higher low on the weekly, even if we push down in here, unless we, really sell off, that the POTUS's condition is a lot worse than we know or is being conveyed by the media right now and his office. Uh, Unless we push 31.98, the overall flow is to the buy side. In that shorts are likely to continue to get squeezed, and this being a news-based event, we have to watch out for it coming back into yesterday's settlement as a potential on the open. In other words, we may see an open drive or an open test drive higher because it's a news-based event. These things are important because here we are repairing the gap structure. This is an area that's completely on auction, and it's important, right? 33.17, very important low volume node that we've tested and retested, and here we are filling it in. And we're finishing the week, the last day of the week, lower, but overall the structure is damaging to the day time frame, but the weekly time frame still shows a potential reversal here. So just keep that into context. And the big picture is conflict, right? Conflict among the time frames now. Yesterday we were in support of a push higher, and it did manage to achieve a higher high, and it sold off from there. But yesterday's trader bite went over why the expectation was to the low side, and we did get the low side. Those who took that got paid. But now we have this conflicting information that the day time frame is canceled. The one time framing up is canceled on the day, and the weekly time frame is still strong. And we are in this crucial area in between high volume nodes. Is that a lot? Yep, that's probably a lot of talking, right? So here's what it looked like yesterday. Yesterday, we traded this triangle pretty well. We held it overnight. As I was doing my homework last night, I'm like, this is holding pretty well. And then we get this puke at midnight. I wasn't here for it. And we have a double distribution profile. Inventory is short. Inventory short coming into this play. We have a very strong, a relatively strong negative delta, and turning positive now, but a relatively strong negative delta. We have a market that's been in balance and is forming yet another triangle right here, right? So we have an impulse that continues to push on the 15 time frame. We still don't see 15-minute time frame. We still don't see a continuation. We have an impulse down, and it's basically in a bear triangle right now from a patterns perspective, with a target, in my opinion, down at 32.92. 32.92. This is the overall picture of the auction. And as we look below, we see that this thing has a little bit of room to go to 79 right down here. And then from there, we have this big low volume node in the 3266 area, 66 being the next big target in the higher time frame. So we may move from low volume node to high volume node to 66, this being 92 if we don't hold. If not, then we are likely to push back to 40, consolidate at 40, and if it still has some oomph behind it, we may see 33.50 from below before the market takes a rest, and that brings us into yesterday's or against yesterday's range. We're opening in a gap down, gap rules apply. We have to pay very close attention to how we are opening and treating this gap on the open. Let's move on to today's plans. I know this was a long trader bite, and I know you want to move on, but there's a lot to cover here. There's a lot of structure taking place. Here's what's expected for today. Primary scenario, the expectation here, we're opening on top of the overnight point of control at the LVN, with the primary areas being 92. Let me put these back up here. 92 below and 66, 68, 68. Okay. And then the primary area above is, of course, 40. And we're currently at the 18 region. These are the big areas. The primary expectation this morning is an open auction that likely drops immediately, likely to test the 3,300, push into 3,300, probably not get into the 92, was rejected here last time, and then impulse up, impulse back up to the overnight point of control and push the other side. I'm looking for it to push back up. It might or might not get to 40. I have no idea, but expect ranges to be wide, expect it to be choppy this morning, and expect two-way interest. There's an incentive here for buyers to step in and take advantage of these lower prices on the higher time frame, the weekly time frame. There's also an advantage here for sellers to come in on the non-farm and potentially risk aversion, given that the news may be worse than expected. Secondary scenario, an open auction that immediately responds. This will likely reset the inventories overnight, pushing back up into the 40 area, consolidating at the 40 area, and coming back off. I'm expecting us to leave a gap open, the gap zone open for the session. 50 is a big area to test up here. The 50 could do it depending on how strong a drive or how strong an impulse we get from the open, but 50 is a pretty decent resistance now. Okay, this is where we stand. We are out of range, so a third and a fourth scenario are necessary here, but you can come up with those on your own. Again, take a moment to tell us where you are located. This goes into the record here in the live chat log. And thanks for joining me. I wish you good risk control, and I wish you a fantastic weekend. I'll catch you guys on Monday. Take care.